Hi everyone, welcome to my channel. I hope you're doing well. Today I will be showcasing another product in my Etsy store. And this is one that I am excited about because I actually like this product a lot. As you well know, people who have or have listened to this channel previously know that I had a good amount of debt. I had about 30K in commercial debt. That was something I needed to pay. And I used several different tools to help me pay my debt. One of them was basically just being very careful about spending. And then I did some other things that I actually want to talk about in some other episodes coming forward. And I found this one technique which I never heard about. And before I begin this, I just want to say that I just want to do a disclaimer. I am not a financial person. I'm not a financial expert. I am not giving financial advice. I'm just sharing things that I did that helped me when I was getting out of debt. And in addition to that, I'm just sharing these sheets or this information for entertainment purposes. So this is a product in my Etsy store, and it's called Velocity Banking Spreadsheet. It's like get out of debt spreadsheet. So it's a velocity tracker. So there's a system named Velocity Banking. I am not an expert in the concept of velocity banking, but I will try to explain to you what I understand from it. And with this spreadsheet, I'll allow you to see how it affects when you're making payments on your credit card. So we start here with this spreadsheet, and what you do is you come over here, and I put card 1. So these are not real cards. These are just fake cards that I got from a royalty-free website. And what I'm going to do is I'm going to show you the concept of velocity banking is that it's a system to help you pay your cards when you have zero cash flow. So I'll show you what I mean by that. For example, if I had $10,000 in debt, let me just fix that. If I had $10,000 in debt, usually you'll have a $250 minimum due. And for some people, whatever happens, you're not working, you don't get paid enough to cover this, you don't have this $250. Somehow you got yourself into the situation where you got up to $10,000 in credit card debt, and then you have to pay this huge amount of minimum due. And you're still going to garner interest. So when I had credit card debt, my APR was about 23%. I understand that is now about 29%. So I'm going to add the 0.29% to it. And that gives us a monthly interest of $246. So it's going to be roughly this amount with this amount of 29% interest rate. That's a lot of money. And if you have zero cash flow, meaning you don't have the extra money to pay this, you're going to be like, well, this is going to get accrued to, like, added to my main principal, and I'm never going to get out of this hole, right? So basically, this is a system that I've been seeing that I really like. I wish I knew about this when I was in debt because I did not. That allows you to track how your credit card bills are affected when you do velocity system. And the way you do it is that you take, for example, let's say you get paid, I'm going to use a basic number just to keep things simple. Let's say you get $1,000 after taxes. I know some people get more and some people get less. This is just to keep things simple. And let's say after you pay your rent and all the things that you have to pay immediately that are cash that you cannot pay with a credit card. Anything that you cannot pay with a credit card, you subtract from whatever your income is. And everything that you can pay with a credit card, you transfer that into your card. That's how it works. And if you don't know about how this works, there's a lot of YouTubers. There's a couple YouTubers who explain it really well. So I'm not going to get too much of how it works. Hopefully this will help the people that do know how it works. So basically, let's say at the beginning of the month, actually on the 7th of the month, I get $500 I get $1,000. I'm able to put $500 into my payments. So I transfer over $500 as payment. So what happens, you see here, it brings down my number. So I'm going to fill out the same data that I have there. Here, that 250, right? It's about 250. It's probably a little bit less. And let me scroll down. Okay, it's different because I put this in here. I was wondering why it was different. Okay, 246.30. I'm going to add $500 to that I got paid, right? So see this? It went down. But then I have to waste that $500. So I'm just going to keep it simple for the point of example. You're probably going to have like $10.95, $26.33, paying different bills and paying different things with your card as you use it along. So I'm going to put in the next paycheck of that month. I'm going to put in more money, right? And once again, I'm going to waste all that money because it's not really money I have. But what's awesome about this system is that once you start paying everything with the money that you earn, two things happen. One, you've covered this. So let's say you have zero cash flow to cover your monthly interest. You've actually covered your monthly interest by putting your money in. And two, since you're buying everything with the cash in the card, you are actually able to get cash back if your card has cash back. So it covers the monthly interest if you have zero cash flow, if you have no money left over to pay for it. So once again, I am going to go here. I'm going to add, because it's going to be 4 paychecks in the month. And then one more. And then over here, I'm just going to take out again. Okay. So I'm going to make in this one, like if I pay off the basic interest of $250, I'm going to say it's $250. Okay, so let's do a comparison. If I only pay the $250, I here have $9,900 left, which is less than this, right? It's less. Let's say if we pay off the $250 here, let's say if we do this, if we do the cash back, and we're able to do the $250. Look at this. It's less, right? So what happens is, look, I think the most important part here is this here. Interest on a credit card is accrued daily. Once you start putting this money in this here, your daily interest goes down, right? So your daily interest is going down. Even if you have cash flow, even let's say you have cash flow available to pay for this, you will still benefit from putting the money in the bank because it will decrease your monthly cash flow. I mean, it will decrease your daily interest rate. So let's say you have a little bit of extra money that you could put towards it. And let's look at that. The number here, and look at this number, also a lot less. So over here you say, well, it's only $10, right? Well, if you take $10 and you multiply that by 12, that's $120. And I'm just going to pull up my calculator. And this is I know it's an easy multiplication, but just for the point of showing you, for those visual learners, 120, you times that by 10. That's $1,200 that you saved. That money could go into brokerage account and grow incrementally with compound interest. So I know you're not seeing it as a lot of money, but when you need to save money if you have kids or if you're getting older, you have to start thinking about every cent. Every cent means something. And if you're part of the FIRE community, you know this, even regardless of your age, you're like, well, every cent counts. So you can see here, you've saved this amount of money. So you see how this system makes a difference. Like I said, I can't really go into the depth of velocity banking, but this gives you an idea of how it works. And what's cool about it, it allows you to track it over the period of it allows you to save over the period of when you're paying your balance. And if you can see, so it's a great system that enables you to actually save money. And this, like I said, if you like this this spreadsheet, it is available in my Etsy shop. And it's not a system that I use. I use the balance transfer system. I do have a spreadsheet that helps you track that. I still haven't placed it in my Etsy store, but if you're interested in that one, I probably will be adding it to this one as a bundle. But for now, I do have this one available in my Etsy shop. And it's going to help you track your purchases, the amount that you paid, your new balance, and your estimated balance and interest. And this is the older file. The new file is actually going to allow you to track 6 cards. So you could track 6 cards. And what's cool about it, let's say that you have 3 cards and you're not able to consolidate them into one. Remember, you could put 500 from one paycheck, 500 from another, or 500 from another, and that's a system that you could use. Or that's probably the way I would have done it, but if I could consolidate, I would. So let me know what you think of this system. I keep on thinking about it, and I'm like, I would have loved to have had this system because it would have helped me so much. There was a point where I was not working. I did not have cash flow to cover this amount of money, and that's a lot of money. And this system would have helped. So this is I think it's called Get Rid of You. The thumbnail has velocity. I'm going to put a link in the description, and it's a velocity banking spreadsheet to help you track your payments over the span of a month, and it helps with credit cards that gain interest on a daily basis. And if you have any questions, please let me know below. Bye.